get to the first one. That's MTAR Technologies. It is up 7% in trade today after its Q3 earnings. The company's EBITDA and profit beat street estimates, and the company has said that they expect margin improvement sequentially over the coming quarters. Let's welcome Parvat Srinivas Reddy, the MD of the company, to understand the outlook of the business going forward. Mr. Reddy, good afternoon. Thank you so much for joining in today. Well, it's been a strong quarter, and that's what the stock price is suggesting as well, because the last year you did see some sort of weakness that came by. Are you getting an indication of what FY26 would end with? You had indicated a 30 to 35% growth. Do you think you can actually surpass that guidance? And what's the indication for FY27? Any initial signals that you're getting?
As we said earlier, we will achieve the growth, what we mentioned earlier, 30-35%. Q4 as well will be a strong quarter for us. And FY27, we're looking at about 50% revenue growth compared to FY26. So that's again a sizable percentage that we're looking at, purely based on strong order book and the kind of feedback we have with the customers who are involved in the technology sector. So we're right on track with what we have said.
Okay, you spoke about growth. You said that over 50% growth on a strong base of FY26 for FY27. What is the guidance that you're giving as far as EBITDA margins are concerned? Can we expect it to be above the 25% range?
For sure, if you can look at the EBITDA margins for Q3 is at 23%. So these margins are going to sequentially improve. And we're looking at the next year. This year, as we said, it will be averaging about 21%, but next year, the EBITDA margins would be up beyond 24 to 25% range.
24 to 25% is what you're looking at margins from next year. Give us some triggers that would lead to that margin expansion. Of course, you're talking about clean energy as being a big segment that is contributing. Defense is the other one. Give us a sense of the order book. Where are you getting all these orders coming in from?
The order book, as I said, we're going to close it around 2,800 crores this year, after achieving revenues of slightly above 900 crores for the financial year. And the orders are trickling in from clean energy, from nuclear, aerospace, all these divisions. So we're expecting close to about 700 crores of orders trickling in this quarter itself. And the margins for next year, the revenues, what we're looking at, 50% revenue growth is purely based on the orders that we are booking by the end of the year, and also we will be having a very strong order book moving forward as well.
Okay, Mr. Reddy, one thing that the street looks very closely at is the fortunes of Bloom Energy. One of your top clients. Overnight, that particular stock was higher by almost 7.5% on the back of a large deal that they had announced. Would you have any role to play in that particular deal? And given the bright prospects that Bloom has alluded to, in FY27, can you give us a sense of where you will end the order book at, and what are the order inflows you expect to receive?
No, it's, to be frank with you, it's not about the orders anymore. It's about how much we can execute. That's where we are right now. Okay. So we are going for the expansion plans. By end of this year, we are going to commission additional capacity. Then again, we're going for another expansion, which will commission by December of next year. So it all depends on how much we can execute as far as the fuel cells is concerned.
So what is the capex you have lined up, and how will you fund the capex?
We have the capex lined up for 12,000 capacity. We're at 8,000 right now. By March, it's about 40 crores and odd. And for December, we're lining up about 20,000 capacity, additional 8,000, which will be about 40 to 50 crores. And then we're actually planning the infrastructure for 30,000 units. So basically, we're looking at a phased manner expansion over the next 1 year, 1.5, 2 years.
Mr. Reddy, you mentioned that it is about execution, not so much about order inflow now. Can you give us a sense of from the time you receive the order to execution, how much time does it take in different segments? Is it different for different segments? What does it mean for working capital cycle ultimately?
See, look, the order execution, in case of fuel cells, the execution is pretty fast. It only depends on getting the inputs in place, the capacities in place, and ramping up to that kind of a level, right? So we are working on that. A lot of training is going on within the company. You must have seen in the current quarter itself what we have done. The next quarter, we are doing even much higher volumes compared to the previous quarter. So it's a stage-wise improvement in terms of the ramp plan that we are looking at. So that's where we are. And so that's how we're going to achieve more and more capacity and execution quarter-on-quarter basis to cater to the demand that we have today.
Okay, Mr. Reddy, understood that. Going forward, what is the ideal order book mix for you, especially in terms of clean energy, in terms of nuclear, which will help you garner the highest EBITDA margins? And if you could at least give us a ballpark figure for the order inflow that one can expect when it comes to FY27.
So we're looking at, it's an approximate number, but
Sure.
we're looking at close to about at least 2,000 crores or more of orders, which will kick in during the next financial year or even much higher than that. So it's a rough number, but we're looking at much higher number than that.
Okay. All right. Thank you so much, Mr. Reddy, for joining in today and giving us an outlook on the business and the order book and the order inflow that the company is expecting as well. With that, we'll slip into a short break. When we come back, we'll get chatting with the management of Aeroflex Industries on their Q3 results on the other side. Stay tuned for that.